Well, welcome to the launch of the Global Status of CCS Report 2022. My name's Alex Apandis. I'm a General Manager Commercial here at the Global Carbon Capture and Storage Institute. I and my colleague Matt Stain will be coordinating proceedings today. For those of you who don't know much about us, the Global CCS Institute is a world-leading international think tank with a mission to accelerate the deployment of carbon capture and storage around the world for climate mitigation purposes. Each year, we release the Global Status Report, which tracks key developments for CCS over the previous 12 months. Today, we'll present that report and hear from speakers across the region on how carbon capture and storage is progressing. Given the number of attendees and the time available, we won't be able to answer questions during the webinar. However, if you post your questions in the Q&A function, we will endeavour to answer them over the next week or so. But before I present the report's findings, I'd like to hand over to our Chief Executive Officer, Jarad Daniels, for some opening remarks.
Well, thank you, Alex, and hello, and thank you all for joining the Global CCS Institute today for the launch of our annual status report. The theme of our report this year is ambition to action. We feel that this theme encapsulates both the incredible growth in demand for CCS that we've seen this past year, as well as the urgency of continued investment required to meet ambitious climate goals. There is no silver bullet solution to climate change, but perhaps we can think of CCS as a Swiss Army knife part of the solution, as a helpful tool that can serve multiple unique roles in helping to decarbonize the global economy. For example, when it comes to essential industries like cement and chemical production, there is no other viable path for deep decarbonization other than CCS. The latest scientific analysis from organizations like the International Energy Agency and the IPCC confirm the importance of incorporating CCS in climate mitigation. In fact, the science shows that reaching our shared global climate goals is practically impossible without its help. The good news is that CCS is a mature, well-understood technology that is increasingly commercially competitive across the full value chain, from capture to storage. We're also seeing a strengthening of government policy support for CCS around the world. For example, in the US where I sit, early analysis suggests that the Inflation Reduction Act and its enhancements to tax credits for CCS could increase the deployment by 13-fold, or well over 100 million ton per annum of additional CCS projects by 2030 compared to prior policy. In the Asia Pacific region, Thailand announced its first CCS project this past year. China commenced operations at its first million-ton per annum project in August. In Australia, CCS projects are now eligible to generate financial returns through the Emissions Reduction Fund. And in general, we see much opportunity for regional collaboration. This is just a small sampling of the many positive CCS developments that have occurred in the past year. And with 61 new facilities added to the project pipeline in 2022, we don't expect momentum behind CCS to slow down anytime soon. Some of the key trends accelerating the deployment of CCS that we've noted in our status report include the government efforts toward establishing effective regulatory environments in CCS incentivizing policy, industry models that support capital investment, such as CCS hubs and networks, increased interest from the financial sector to incorporate CCS in their investment strategies, ESG considerations, and green taxonomies. Unprecedented engagement in direct air capture with CCS, or DACs, with billions of dollars of funding allocated to scale up this essential technology. And as well, an uptick in clean hydrogen and other low carbon fuels, with dozens of blue hydrogen projects now in development around the world. In sum, there's never been a better time for CCS. Our report finds that in the past 12 months, the CO2 capture capacity of all the facilities under development has grown to 244 million tons per annum, which is an impressive growth of 44% compared to last year. But global efforts to reduce emissions, including investment in CCS, are still grossly inadequate. Government policy must be met with private capital to unlock the full potential of CCS and limit global warming to 1.5 degrees to avoid the most catastrophic impacts of climate change, which makes this decade absolutely critical time to move from ambition to action, which brings us full circle back to the overarching theme of the report. So Now I turn it back to my colleague Alex Santos, our General Manager for Commercial, to dive deeper into this year's findings, after which we'll have some brief remarks from 3 industry and policy experts. So Alex, back over to you.
Well, thank you very much for those opening remarks, Jarad. So what I'll do now is I'll bring up the presentation and present the report. Right, so as Jarad said, the theme of this year's report is ambition to action. The ambition to achieve net zero emissions by mid-century, which has become the accepted objective of efforts to mitigate climate change, is driving increasing action to meet those expectations. The total capture capacity of carbon capture and storage project pipeline is now at its largest and growing at its fastest rate since the Global CCS Institute started tracking it back in 2009. The capacity of all CCS projects that are operating or in development now exceeds 244 million tonnes of carbon dioxide, having grown by 44% since last year's status report was published. This impressive growth is most evident in North America, Europe, and the United Kingdom, where strong policy has strengthened the business case for investment in carbon capture and storage. And whilst the Asia Pacific region is starting from a smaller base, several new projects entered or advanced in the project pipeline in this region as well. This acceleration in CCS investment is extremely encouraging, but to achieve our net zero aspirations, total installed capacity of CCS must increase by more than a factor of 100 going forwards. The CCS has continued to grow for a 5th year in a row, and the pace of that growth is accelerating. The total carbon dioxide capture capacity of CCS projects that are operating or in development grew by around 75 million tonnes in the last 12 months alone. Today, there are 30 commercial CCS facilities in operation, there are 11 in construction, and a further 153 in feasibility or front-end engineering and design studies. Actually, there are more facilities than this in development right now. New projects are being announced to the public almost every week, and this chart reflects the project pipeline at the end of last month. So the root cause of this rapid growth in investment in CCS are the rising expectations of civil society for more urgent action to mitigate climate change. There has been a rush of commitments to net zero by literally hundreds of companies, countries, subnational governments, and cities, which has increased demand for greenhouse gas emissions reduction services. This has initiated rigorous analysis of how to deliver on those commitments against a backdrop of continued growth in global demand for energy and the industrial products that our advanced civilization relies upon, such as fertilizer, steel, cement, and chemicals, where CCS is absolutely critical. Progressive governments have reacted by strengthening policies to drive private sector investment in CCS, which supports their emission reduction ambitions, as well as providing economic prosperity and a just transition for their communities, which is very important. The private sector, seeing a strengthening business case for carbon capture and storage, is responding by advancing new projects and developing new business models to reduce cost and risk. Put simply, every technology and approach is necessary. Anything left off the table increases cost and risk, and CCS is just one of the many necessary technologies. The 30 operating commercial carbon capture and storage facilities are shown on this map. The leadership of North America is clear, with 18 operating facilities. 13 of those are in the United States and 5 are in Canada. Europe and the Nordic states host 4, 1 in Hungary, 1 in Iceland, and 2 in Norway. Australia, Brazil, Saudi Arabia, Qatar, and the United Arab Emirates each have 1 commercially operating CCS facility, and there are 3 now operating in China. Commercial facilities in early development are shown here in yellow. Those in advanced development are in green, and those in construction are the blue dots. Compared to the previous map, the increased geographic distribution of carbon capture and storage facilities in the pipeline is clearly visible. In 2022, we saw an additional 61 CCS facilities added to the project pipeline. And the number of countries hosting operating facilities shown on the previous slide was 11. If facilities in construction or feasibility or front-end engineering and design studies are also considered, that number swells to 26 countries. So 2022 has been a big year for carbon capture and storage. Some of the notable developments of the last 12 months include the commencement of operation of 4 new commercial facilities. These are Red Trail Energy's ethanol plant in the USA, which has carbon capture and storage, Sinopec's Shilu Zhengli facility capturing from a petrochemical plant in China, Entropy's post-combustion capture facility on a natural gas reciprocating engine at the Glacier Gas plant in Canada, and the Orca direct air capture facility in Iceland using Climeworks technology. The last 2 are particularly significant as they are the first of their type to enter commercial operation. Entropy's project is the first commercial facility to capture carbon dioxide from natural gas combustion, and Orca is the world's first commercial direct air capture facility. Capture from gas combustion and directly from the atmosphere are absolutely necessary to achieve net zero targets, so we will need to see many more projects like these enter operation in the future. There was also major policy progress in a number of countries that I'll briefly describe a bit later in this presentation. And Germany, Finland, France, and Timor-Leste now have their first projects in development. So we have observed an interesting evolution in the geological storage of carbon dioxide. Currently, 21 of the 30 operating facilities store carbon dioxide via enhanced oil recovery, but this is changing. 70% of facilities in development plan to use dedicated storage reservoirs with no enhanced oil recovery, and the majority of those will store in deep saline aquifers. More developers, it seems, are now making a business case for carbon capture and storage without the revenue created through enhanced oil recovery. Also, projects are getting bigger. Some storage facilities aim to inject 5 million tonnes per annum of carbon dioxide or more. The average injection capacity of operating facilities, currently around 1.3 million tonnes per annum, could double in the next decade when these new facilities come online. Carbon capture and storage, like well-established industries, requires infrastructure to support its development and operation. For CCS, that infrastructure is CO2 transport and storage facilities. New CCS facilities are most commonly part of a network involving the transport of carbon dioxide from multiple capture sources by pipelines or ships, or even a combination of both, to storage facilities. Norway's Longship project is an example. It involves carbon dioxide transport by pipeline and by purpose-built ships that are currently under construction. CCS has a significant role in supporting the production of clean hydrogen. The Hydrogen Energy Supply Chain project successfully demonstrated the shipping of liquid hydrogen in a purpose-built hydrogen carrier from Victoria in Australia to Kobe in Japan in February of this year. Carbon dioxide pipelines, transport ships, geological storage resources, and port facilities are a bit like electricity transmission lines for renewable power. It's essential infrastructure to support the transition to net zero emissions. Carbon dioxide removal from the atmosphere at the multi-gigaton per annum scale is essential to achieve net zero emissions, according to modelling by the IEA, the IPCC, and many others. This can be achieved through a combination of nature-based and technology-based solutions. The security, technology-based solutions, including bioenergy with CCS or BECCS, and direct air capture with storage or DACS. The security and permanence of geological storage using BECCS and DACS is vastly superior to storage in biomass or soil through nature-based solutions. Considering realistic constraints on the availability of sustainable biomass, BECCS could possibly deliver a maximum of around 7 billion tonnes per annum of abatement. The main factor that will determine the level of deployment of direct air capture is its future cost, which is uncertain. The Institute examined the potential role of BECCS and DACS in achieving net zero emissions using our global emissions and economic model across a range of possible future direct air capture costs. A significant result was that if the cost of DACS reduced to $200 per tonne, the total global cost of achieving net zero by mid-century would be reduced by more than $1 trillion. So the size of the prize is enormous, and there is significant activity to commercialise direct air capture technology. For example, in late 2021, the first commercial DACS facility started operating, Climeworks' Orca project in Iceland. In 2022, 1.5, a subsidiary of Occidental's low carbon ventures business, and Carbon Engineering announced final investment decision of their DACS facility in the Permian Basin, that will initially capture 500,000 tonnes per annum, with potential to scale up. Also this year, Carbon Capture announced Project Bison, a direct air capture project which aims to capture and permanently store 5 million tonnes of carbon dioxide per year by 2030. Carbon direct removal and point source CCS are complementary rather than competitive, and both require significant investment in pursuit of net zero by mid-century. The role of finance in supporting the more widespread deployment of carbon capture and storage is absolutely critical. In line with the wider shift toward green lending and sustainable investing, increased focus has been placed on the role of green or sustainability-focused taxonomies. Significantly, CCS has already been formally recognised as an economic activity within the EU's taxonomy, with the subsequent delegated act setting out technical screening criteria. The recognition of abatement delivered through carbon capture and storage by voluntary and statutory carbon markets is necessary to support CCS investments. This requires the development of methodologies to verify abatement, such as that which is in place in Australia that Jarad mentioned briefly in his opening remarks. Ideally, carbon credits created under one scheme will be recognised by all schemes. We expect a convergence as these methods are developed, all subject to the same high-level principles with rigorous requirements related to additionality, permanence, and verification. ESG considerations are becoming a stronger driver of climate action. CCS is already reported under ESG reporting schemes, but investors are seeking more detail in disclosures. We expect that new methodologies for reporting carbon capture and storage under ESG frameworks that provide such detail will be developed in coming years. Okay, so now I'll quickly cover some key developments around the world, starting with United States policy. The signing into law by President Biden of the Inflation Reduction Act in August of this year is a game changer in the United States. One analysis finds that it will increase the deployment of CCS by over 100 million tonnes per annum of capacity captured per year. The Inflation Reduction Act expands eligibility for CCS tax credits under Section 45Q, increasing the tax credit to $85 US per tonne for dedicated geological storage of carbon dioxide, $60 US per tonne where the carbon dioxide is used for enhanced oil recovery. And there is now also a credit of up to $180 US a tonne for direct air capture and a direct payment option. The United States also enacted the CHIPS Act, providing $1 billion to support carbon removal research and development. And late in 2021, the Infrastructure Investment and Jobs Act passed, making $12 billion US available for carbon capture and storage over the next 5 years. The US Office of Fossil Energy and Carbon Management published its strategy for advancing CCS. The US clearly continues to be a leader in CCS. In Canada, the 2030 Emissions Reduction Plan, released in the first quarter of 2022, seeks to make Canada's industries cleaner and competitive. A CCUS strategy is currently under development, and importantly, the 2022 federal budget included a CCUS investment tax credit, 60% for direct air capture with storage, 50% for other carbon capture and storage applications, and 37.5% for utilization, transportation, and storage investments. The credit is available to businesses from the 1st of January of this year, 2022, but it's not available to enhanced oil recovery. Also in Canada, the province of Alberta announced its hydrogen roadmap in late 2021, outlining an intention to become an international leader in clean hydrogen production. CCS is key to that roadmap. And in November 2021, the province of Saskatchewan announced the eligibility of pipelines transporting carbon dioxide, whether for CCS or enhanced oil recovery, for the Provincial Oil Infrastructure Investment Program. That program provides pipeline owners with up to 40 million Canadian dollars in fully transferable tax or royalty credits over the first 3 years of operation. Moving on to Europe, there are now more than 70 commercial facilities across all stages of development in Europe. This is in part being guided by the EU making climate neutrality by 2050 a binding target, along with reducing emissions by 55% by 2030. CCS networks are fundamental to EU ambitions. To this end, Norway and the Netherlands are leading on CCS with the Langskip and Porthos projects, and the UK is advancing the creation of 4 CCUS networks capturing 20 to 30 million tonnes per annum of carbon dioxide by 2030, with £1 billion allocated to support their development. The first call of the EU Innovation Fund awarded €1.1 billion to 7 large-scale innovation projects, 4 of which are CCUS projects. Finland, Belgium, Sweden, and France will all be beneficiaries of funding to support their CCS projects in hydrogen, chemicals industry, bioenergy, and cement production, respectively. The second call of the EU Innovation Fund awarded €1.8 billion to 17 projects, of which 7 employ carbon capture and storage, or carbon capture and utilisation. These are located in Bulgaria, France, Germany, Iceland, Poland, and Sweden in the cement, lime, chemicals, and synthetic fuel sectors. One project specifically covers CO2 storage infrastructure. The Dutch government has allocated €2 billion to capture facilities in the Port of Rotterdam network through its SDE++ subsidy, and Denmark has announced €5 billion over 10 years for CCS projects. So clearly a lot of activity in Europe. The Middle East and North Africa region remains the world's largest oil exporting region and is seeking to maintain its energy exports into the future, including hydrogen. There are 3 operating CCS facilities in the region: Ras Laffan at Qatar Gas, the Hawiyah natural gas liquids plant in Saudi, operated by Saudi Aramco, and El Rayada, operated by ADNOC. This region has a large potential for expansion due to its large geological storage resources, oil, gas, and petrochemical industry expertise, which is directly applicable to carbon capture and storage, and the recognition by their national governments of the role in CCS in emissions mitigation, and the potential for this region to become a leading global supplier of low-carbon hydrogen. Bahrain, Qatar, Saudi Arabia, and the United Arab Emirates have all included CCS in their nationally determined contributions under the Paris Agreement, and their national interests are very well served by technologies such as CCS that can reduce emissions from the production and use of fossil fuels. The Kingdom of Saudi Arabia, the UAE, and Egypt announced the establishment of voluntary carbon markets and fully regulated carbon exchange and trading schemes. And all of these carbon markets are expected to benefit all decarbonisation technologies in the region, including carbon capture and storage. Now to the Asia Pacific region. In 2021, China announced its goal of peaking carbon emissions by 2030 and achieving climate neutrality before 2060. Major state-owned energy companies are leading the project development in China. China's first integrated million-tonne CCS project, developed by Sinopec, came into full operation at the end of August of this year. Huaneng has begun to construct a 1.5 million tonne per annum coal-fired power CCS project in the Oros Basin, which is anticipated to be the world's largest coal power CCS project when it starts operating. The government of Japan is developing specific legislation for CO2 storage and continues to support large pilot projects. Japan CCS is working with Kansai Electric Power on a demonstration project, for example, to transport carbon dioxide from Kansai Electric Power's coal-fired power complex in Kyoto to the Tomokamai CCS project, commencing operation in 2027 if it proceeds. NYK and the Knutsen Group have established a new business for liquefied carbon dioxide transportation and storage. Mitsubishi Shipbuilding is working on the construction of a carbon dioxide demonstration ship, transport ship. Singapore, which has significant emissions from the petrochemical industry but no domestic geological storage resources, is investigating regional CCS hubs in Asia. Indonesia is developing carbon dioxide storage legislation, and 4 separate CCS projects are being developed by BP and SKK Migas, Repsol, Pertamina, and a consortium involving JOGMEC, Mitsubishi Corporation, the Bandung Institute of Technology, and PT Pancur Amara. Also in this region, like Indonesia, Malaysia is developing carbon dioxide storage legislation and is also positioning as a potential storage hub for neighbours. Petronas, the CEO, has said 40% of storage at Malaysia's first project, the Kasawari project, will be made available to other users. In Australia, a methodology has been approved that enables carbon capture and storage projects to generate Australian carbon credit units, providing a financial revenue stream, which is critical. Australia's first CCS projects are associated with gas processing. CCS projects are being advanced by Santos, Inpex, ExxonMobil, Woodside, BP, Japan, Australia, LNG, Mitsui, and others. Santos's Moomba project, which is in construction and expected to start is expected to start injection in 2024. And when it starts operating, it will join Gorgon, which is already operated by Chevron. Consistent with global trends, CCS is now being considered in a broader range of industries in Australia, including blue hydrogen production and blue ammonia production. Carbon dioxide transport and storage as a business is also emerging, particularly off the coast of Northern Australia, where Santos, Inpex and others have announced their projects have the potential to take third-party carbon dioxide. Thailand is in the very early stages of developing carbon dioxide storage legislation, and PTTEP, their national oil and gas company, announced Thailand's first CCS project in June, re-injecting reservoir carbon dioxide at its Artit gas field. The publication of the Intergovernmental Panel on Climate Change Working Group 3 report, Mitigation of Climate Change, has increased awareness of the need for CCS, illustrating its effectiveness and viability through wide-scale deployment across various scenarios and sectors. 21 countries now have CCS in their nationally determined contributions, and more are expected to follow. Most significantly, more than 80% of countries that submitted long-term low-emission development strategies included carbon capture and storage. Regional cooperation in the establishment of CCS hubs and to facilitate transboundary movement of carbon dioxide is critical. This is now being actively considered in the Asia-Pacific region and in Europe, where the flagship project will likely be the first to transport CO2 across national borders. In conclusion, CCS is advancing more rapidly and with more momentum than ever before, and this is enormously encouraging. But meeting ambitious climate targets requires much, much more. Installed capacity must increase by more than a factor of 100 over the next 30 years. This can only be achieved if governments put supportive policies in place that result in massive private sector investment in CCS, supported by a finance sector that provides debt at an appropriate cost. The good news is government knows how to do this. They've done it before for other emerging industries, most recently renewable energy generation over the past 25 years. And based on what I've just presented, it appears to be starting for carbon capture and storage. So that concludes the presentation of the 2022 Global Status of CCS report. I'll now hand over to my colleague, Matt Stein, who is Manager Advocacy and Communications Asia Pacific here at the Global Carbon Capture and Storage Institute, who will guide proceedings from this point forwards.
Well, thanks very much, Alex, and thanks everybody that has joined us this afternoon or this morning, wherever it may be that you're calling in from. One of the most active companies in the carbon capture and storage space in Australia is, of course, Santos. So it's my great pleasure to introduce our first guest speaker for the event, and that's Chad Wilson, who's Vice President of Energy Solutions. Chad joined Santos in 2014 and has held previous roles of Chief Production Engineer, General Manager of Cooper Development, and Vice President of Cooper Upstream. During his tenure, the Cooper Basin break-even oil price was reduced by almost 2/3, delivering a strongly cash flow positive business. In his current role, Chad has responsibility for the progression of Santos's emissions reduction, carbon capture and storage, and clean fuels projects. Prior to joining Santos, Chad had worked in various operational and engineering roles with Talisman Energy and Teco Communico in Canada. Chad, please tell us about Santos's outlook for CCS deployment, both in Australia and through the region.
Yeah, great. Thanks, Matt, for that introduction. I kind of wish my mom was here to hear that, and she might be more proud of me than she normally is. Anyways, good afternoon, everyone. Thank you very much for the opportunity to share with you an overview of the Santos's plans for carbon capture and storage, and the 3 carbon capture and storage projects we're currently progressing at Santos. We at Santos were very excited about the projects and the opportunity it creates, not just for our company, but also the industry, the larger industry. For those that don't know, I'll just do a really quick intro on Santos. We're the leading Asia-Pacific LNG supplier, focused on delivering clean, affordable energy to our customers. We operate in Australia, Papua New Guinea, Timor-Leste, United States, through our recent Pika project in Alaska. In addition to our LNG portfolio, we're actually the leading supplier of natural gas to the Australian domestic market. We really got into our carbon capture and storage projects as a result of setting some really hard climate goals. And we did that with a climate transition action plan, which is targeting to be net zero by 2040 for scope 1 and 2 emissions. Along the way, we've set a bunch of interim targets focused on reducing our emissions intensity and our other emissions. And we also want to help our customers reduce their emissions by 2030 through the sale of clean fuels and CCS services. So the first of our projects has already been talked about a little bit, but it's at Moomba in the South Australian Outback. Our partner in that project is Beach Energy, and we jointly took a final investment decision in fourth quarter of 2021. We plan on first injection for that project being in 2024. That project initially has been sized to deal with all the reservoir emissions from our current gas production, which is around 1.7 million tons per annum. The project's currently under construction. We're about 25% complete that project. But what I also want to talk about a little bit is in parallel to that project, we're actually building a direct air capture technology park where in Moomba, where we're trialing not just our technology, but other third-party technologies on direct air capture. Our next exciting project that was also mentioned is our Bayu-Undan CCS project in Timor-Leste in Northern Australia. This project aims to repurpose the Bayu-Undan gas fields, the pipelines, and the facilities as a CCS hub for the region. FEED for this project started earlier this year, and this project is the foundation of a hub that will capture emissions from the Barossa gas development as the first customer, which will be online in 2025, and the Darwin LNG facility. There's a lot of future expansion opportunities for additional LNG processing trains in the area to come into this project. The Northern Territory government has identified potential sources of over 12 million tons per annum of CO2 that could be captured at a Darwin low emissions hub. This project's capacity is based on the pipeline capacity, which is about 10 million tons per year. And it's got sufficient capacity in the Bayu-Undan field to sustain injection for over 25 years. This scale would put Bayu-Undan CCS project kind of at the forefront of global large-scale projects and position Timor-Leste as a significant global player in carbon capture and storage. Our final project is our Western Australia CCS hub. This project is currently working towards entering the front-end engineering design phase. This project, again, is looking at reusing some of our depleted reservoirs and existing infrastructure to keep costs low. This time, those existing infrastructure is at our Reindeer field offshore WA. The existing infrastructure has been reviewed. We found that infrastructure to be good for repurposing to a future CCS hub. Again, the limiting component for this project is the pipeline, which is expected to be able to transport up to 5 million tons per annum. Thanks for your time today. I look forward to providing updates in the future. Thank you.
Thanks so much, Chad. My next guest is Noriani Yati Muhammad, who's head of Sarawak Resource Development and Management at Petronas, the Malaysian oil and gas operator. Yati is focused on strategizing the overall development and management of oil and gas resources in Sarawak, Malaysia. Since joining Petronas in 1994 as production technologist, Yati had various roles in engineering, operations, techno-commercial, planning, strategy, portfolio management, and asset management. After 20 years with Petronas Karagali, she joined Malaysia Petroleum Management in 2014 to assume the role of host government and manage petroleum arrangement contractors. She played a key role in the unitization of several Malaysia-Brunei fields, strategizing the integrated development of sour gas fields in Sarawak, and led the establishment of Petronas's upstream carbon capture and storage framework and operating model. Now, Petronas are developing an offshore storage project and hub in offshore Malaysia. Yati, please tell us about the vision for that hub and for Petronas's vision for carbon capture and storage through Southeast Asia.
Thank you, Matt. Right. So once again, thank you for inviting me to share on some progress on what's happening on CCS area in Petronas as well as in Malaysia. I hope you know Petronas. Petronas is a Malaysia fully integrated oil and gas company. If nothing else, you wouldn't recognize Petronas for our F1 partnership. with Mercedes. So in 2021, we have announced our net zero carbon emission aspirations, which is very much aligned with our statement of purpose, where we are a progressive energy and solutions partner enriching lives for a sustainable future. In line with our net zero carbon emission 2050 aspiration, CCS is one of the key enablers in terms of reducing our GHG emissions. For Petronas, we have two focus areas. First, CCS as an enabler for us to ensure sustainable gas supply by monetizing our high CO2 resources whilst committing to lower GHG emissions. Our second focus area is for CCS as a potential new revenue stream for Petronas by providing storage capacity to others. I think Alex earlier mentioned that where our President and CEO has announced that there's ample capacity for storage in Malaysia, where about 40% is available for others to utilize. For today, I would like to share 3 key milestones that have been achieved for this year. First is, as a regulator, Malaysia Petroleum Management has recently completed the upstream framework for CCS with the objective to facilitate successful deployment of CCS projects in Malaysia. So this covers the entire ecosystem, which includes technical, technology, regulatory, commercial, and collaboration. So among the key deliverables from this was establishing the Malaysia Sequestration Area Development Plan, which maps out all possible sources of CO2 as well as storage sites in Malaysia. Another deliverable out of this was the CCS technology roadmap, where we've screened available technology in the entire value chain of CCS and selected and shortlisted possible ones for application in the future in Malaysia. Our second key milestone this year was, as an organization, Petronas has created a new division called Carbon Management Division, headed by Henry Hisham. So our CMD primary responsibility is to drive and enhance all key decarbonization efforts within upstream and establish an integrated platform to streamline the management of CCS within Petronas. So as of a couple of months now, CMD has signed MOUs with like-minded partners in areas along the CCS value chain, from emissions and capture, transport, as well as sequestration and storage. A third key milestone for us is in terms of CCS projects delivery. It is mentioned earlier that we have a major project that we expect to sanction or reach our final investment decision by December this year, Kasawari, and once start up in 2026, Kasawari will be one of the biggest offshore CCS project in the world, with a capacity to store about 4.5 million tons of CO2 per annum. We also have our second project, which is currently undergoing technical maturation, Lang Lebah CCS, which we expect to be sanctioned by next year. So in conclusion, things are moving rapidly in Petronas with regards to CCS. We are putting our ambitions into action, and we're all looking forward to the good progress. Thank you. Back to you, Matt.
Thank you, Essie. I really like the build-in of ambition to action, that being our key message this year. Again, for those that have joined us, there is a Q&A function available to you. Although we're not going to be answering questions this session, please do feel free to send through your questions or comments that you may have, and we will endeavour to get back to you after the session. The last of our guest speakers, but certainly not least, particularly due to the growing interest in direct air capture, is Doug Ray, Vice President of International Business Development at Carbon Engineering. Now, Doug is the Vice President, as I say, of Business Development and Carbon Engineering, a climate solutions company. CE is leading the commercialization and innovation of direct air capture technology, and that's technology that captures carbon dioxide directly from the atmosphere. Doug leads Carbon Engineering's international business development activities, creating partnerships with plant developers, investors, and off-takers around the world. And Doug brings more than 20 years of international business development experience to CE, having previously served as VP Business Development for MDA, a leading Canadian technology firm. Now, Doug, can you give us some insight into the progress of DAX over the past year and your view of DAX deployment quite specifically in the Asia Pacific region?
Thank you, Matt. It's a pleasure to be here at the Asia Pacific launch of the Global CCS Institute's report on the global status of CCS for 2022. Just a very quick summary of Carbon Engineering's background. For those of you who may not know much about it, as Matt mentioned, we are a direct air capture company. We were founded in 2009 and here in Canada by Dr. David Keith, who's now a professor at Harvard and a CE board member. Bill Gates was one of our founding investors, and we built our first pilot plant, DAC plant in Canada in 2015. We added a fuels capability in 2017. And then in 2021, constructed our Carbon Engineering's Innovation Center, which you can see in the background behind me. Most importantly, what we want to talk a little bit about today is that we now have large-scale climate-relevant deployment underway with announced partnerships in the US, Canada, the UK, and Norway. 2022 has been a very pivotal year for Carbon Engineering and for direct air capture. Three key events. One, as Alex mentioned, the US Inflation Reduction Act enhancements to 45Q greatly strengthened the business case for direct air capture and storage, with a tax credit of up to $180 US per ton. Two, our US plant development partner, 1.5, has started construction on the first commercial scale plant, a 500,000 ton per year plant targeted for operation in 2024. They've also announced a scenario of deploying 70 to 130 million tons per year of direct air capture by 2035, less than 15 years from now. And three, there are already major commitments to purchase carbon removal from this plant. This includes 1.5 announcing an agreement with Airbus for the purchase of 400,000 tons of carbon removal credits. And here in Asia Pacific, SK Trading International signed an agreement with Oxy to purchase up to 200,000 barrels per year of net zero oil for 5 years. And Oxy plans to inject 100,000 tons per year of captured atmospheric CO2 to create the environmental attributes of that oil. In Asia Pacific, we've seen tremendous acceleration of policy and program work following on country and corporate commitments to achieve net zero. And we believe that passing of the Inflation Reduction Act and the anticipated very strong economic growth that will result will further accelerate the infrastructure and policy work in Asia, building out that network of infrastructure that we really need to deploy more rapidly. Carbon Engineering is speaking to many potential partners in the region about the prospect of using direct air capture plants. One is long-term anchor tenants for CCS hubs, and also just for being in the business of creating both low carbon intensity fuels and negative emissions or permanent carbon removal. And we look forward to making some formal announcements in the future about those partnerships. Thank you very much for your time today.
Thank you so much, Doug, and thank you to everybody that's spoken today. I'm now joined by my colleague from Japan, Hiroshi Nambo, who is our branch representative in Tokyo. Hiroshi Nambo is the Institute's branch representative, as I say, and he previously worked at Sumitomo Coal Mining for 26 years and was responsible for exploration and development in overseas coal and gas concessions, management of overseas coal mining operations, abandoned coal mine methane utilization, R&D, and CCS, CDM project development related to CMM and VAM, utilization, and so on. Hiroshi holds a Bachelor of Engineering and Resources and Environmental Engineering from the Department of at Waseda University. Nambo-san, could you give us an update on CCS progress in Japan and the various activities that Japan is undertaking through Asia in regard to CCS?
Okay, thank you for kind introduction, Matt. I am Hiroshi Nambo, Japan branch representative of Global CCS Institute. Now, I would like to briefly explain on current CCS progress in Japan. Japan aims to reduce its greenhouse gas emission by 46% in 2030 from its 2013 levels. And for longer term, the government has set an ambitious target for net zero by 2050. CCS is included in this net zero target. Our government, METI, Ministry of Economy, Trade and Industry, is holding an expert committee on CCUS long-term roadmap. Interim report of roadmap committee was issued last May, which includes several important targets. Quantitative target of CCS in Japan has been set with the amount of 120 to 240 million tons of CO2 per annum in 2050, and CCS business law shall be legislated in order to accelerate commercial deployment of CCS project. Economic incentive to support the viability of a CCS project shall be regulated to monetize, stored, and utilize CO2, and the overseas CCS project should be promoted through Asia CCUS network, which is METI's and area's initiative in collaboration with ASEAN countries and supported by Global CCS Institute. JOGMEC, Japan Oil, Gas and Metal National Corporation, government body under METI, is to prepare financial support such as loan, investment, debt guarantee to assist commercial CCS project. Now, I'd like to a little bit touch on actual CCS project in Japan. Japan CCS company has successfully implemented a full chain Tomakomai CCS project and completed the storage of 300,000 tons CO2 in the geological formation below 1,500 meters under the seabed offshore Tomakomai city in Hokkaido. And Japan CCS now continues to monitoring for stored CO2 and keep injection wells for future CO2 storage transported from other parts of Japan. There are some other CO2 capture facilities in Japan, such as biomass power plant in Mikawa, Kyushu, and the IGCC plant in Osaki, Hiroshima, coal-fired power plant in Maizuru, north of Tokyo, and captured CO2 will be transported by ship and stored in some appropriate geological formation, including Tomakomai injection site. Shipping and shipbuilding companies are now preparing liquefied CO2 ship transportation demonstration project under the government support, which will be started from the middle of next year. In parallel with government-led project, major Japanese greenhouse gas emitters have announced to implement their large-scale CCS project in Japan toward 2030. They are about to start feasibility study and FEED on CCS project for their power plant and industrial facilities. They are keen to identify most appropriate capture technology to fit to their operation and identify most suitable storage site adjacent to their operation or to overseas storage site. Alex Zapantes has already mentioned in his presentation that Japanese private sectors are also actively participating in CCS project abroad, overseas, and especially in Australia and Southeast Asia. And there are so many announcements on global partnership and joint project, which are great and reassuring. Yes, Japan is now aggressively tackling CCS project in domestic Japan and overseas with the collaboration with partner government and various private industry around the world. That is my CCS update in Japan, and thank you for listening. Matt?
Thank you very much, Hiroshi. Really appreciate that. Our final speaker of the day, and once again, certainly not least, is my esteemed colleague, Dr. Xiaoliang Yang. He is the country manager for China at the Global CCS Institute. In his current role, Xiaoliang leads the Institute's efforts to develop and execute policy, advocacy, and engagement strategies to build support for CCUS in China. Prior to joining the Institute, Xiaoliang served as Technology Director at OGCI, a clean technology venture firm focusing on CO2 and methane reductions, energy efficiency improvement, and transport decarbonization. Xiaoliang also has held various positions at the World Resources Institute, leading its China Climate and Energy Program and CCUS activities. In addition, Xiaoliang worked at the Department of Social Affairs of UN headquarters and CAPSARC in Saudi Arabia. Xiaoliang holds a PhD in environmental science from State University of New York College of Environmental Science and Forestry, and a Master of Public Affairs from Maxwell School of Syracuse University. Xiaoliang, over to you.
Thank you, Matt, and for the wonderful introduction. Good morning and good afternoon. It is my great pleasure to provide you with an update on CCUS in China. So looking back, 2022 is a truly exciting year for CCUS development in China. Since the country made its commitment on carbon neutrality 2 years ago, CCUS has been significantly advanced from the policy side to the project side. So on the policy side, CCUS was incorporated in China's 1+N climate policy system, demonstrating the nation's highest commitment on this decarbonization approach. From the policy language, it is very clear that the central government will be supporting integrated megaton scale CCUS demonstration projects in the next few years. Specifically, the People's Bank of China has included CCUS in its carbon emission reduction facility last November, a structural monetary policy instrument to support low carbon activities. On the project side, China has achieved several major milestones in the past 12 months. China's first integrated megaton scale CCUS project came into full operation in Shandong province since the end of August. In this project, Sinopec captures 1 million tons of CO2 annually from its Qilu or petrochemical plant and transport the CO2 for enhanced oil recovery. In August last year, China National Offshore Oil Corporation, CNOOC, started to construct China's very first offshore CO2 storage project 200 kilometers away from Hong Kong. Hualeng, one of China's largest power producers, has announced a 1.5 million ton scale per annum coal power carbon capture project in Ordos Basin, which is anticipated to be the world's largest coal power CCUS project when it becomes fully operational in 2023. Finally, China National Petroleum Corporation, CNPC, announced to reach an annual injection capacity of 5 million tons of CO2 in total by 2025. So in summary, if all goes as planned, CCUS will help China achieve an annual CO2 reduction capacity around 8 million tons by 2025. And that's all from me. Thank you all for listening, and Matt, back over to you.
Thank you, Xiaoliang. That's all we have for you today, folks. Thanks to everybody that has joined us for the launch of the Global Status of CCS 2022 report. Once again, what an exciting time for carbon capture and storage around the world as we do transition from ambition to action. I'd also like to thank our guest speakers today. That was Chad, Yeti, and Doug from Santos, Petronas, and of course Carbon Engineering respectively. I'd also like to thank my colleagues Jarad Daniels, Alex Apantis, Varoshi Nambo, and Xiaoliang Yang from the Institute. Please find the report at status22.globalccsinstitute.com. That's status22.globalccsinstitute.com to read the report. A PDF, and I've noticed a few people have asked about this in the comments, but a PDF will be available later on in the week. If you want to stay in touch, or if you have any questions for us beyond this webinar, please contact us through the contact page on our website or through the status report website. Once again, thank you everyone who has joined. Have a good day, have a good morning. Thank you. Bye-bye.